To the weekly close live here on the Passive Income Podcast. Joseph, how are you doing this fine Friday afternoon?
Dave, I'm doing great. How are you?
Yeah, hey, it's March 1st. It's been the
Yeah.
warmest winter ever, and so can't complain, right?
That and happy national, or I don't know, maybe International Employee Appreciation Day, March 1st every year.
I did
I
not.
learned that I learned that about an hour ago.
Oh, okay. Well, appreciate your employees, and if you're an employee, you're appreciated. That is great.
And if you are one of the more than like 20 million employees that work for me, because I own VTI, therefore every company in the US markets, take tomorrow off.
Right. Yeah.
As your
Tomorrow's
boss,
Saturday. They're probably taking most of them are probably taking it off anyways, right?
as an owner in your company, therefore your boss, take the day off. You've earned it. Paid.
Great, great. So a lot happened this week. I want to say at least four major Canadian banks reported earnings this week. So I'm sure we're going to talk about that,
No
and of
doubt.
course, a lot of other earnings coming up on this episode of the Weekly Close Live. So many earnings to go through. So let's just dive right into it. I guess first, kind of the way we usually start. While I pull this up, I will let you kind of to carry. We'll get to the closing numbers here right quickly. I just got to get the screen up.
Well, I'll kind of banter around while you do that. Big kind of news this week: Nvidia crossed the $2 trillion market cap threshold today for the first time. So that bull run is still going, and Dave will be here with the numbers in a second. But we have seen record closes today on both the Nasdaq Composite Index and the S&P 500. And I'm not sure about the Dow Jones, but if they're not at the record, they set a record. What was it, Dave? Wednesday or Thursday? So markets are looking good. We are very, very green right now.
Aren't bull runs fun? Bull runs are so much fun. And yeah, so exactly what you just mentioned. Of course, I'm in Canada, so I always like to start with the TSX. Again, 21,552, up a fair bit from where we closed last Friday, and still again closing in on that all-time high of just slightly over 22,000 was the all-time high a few years ago. And as you just alluded to, the S&P 500 again on a tear, closing this week at 5,137. The Dow Jones Industrial Average closing this week at 39,087. And here's the fun one we love to look at every week. It rounded that up because we're actually down a little bit from where we've been the last few weeks at the Canadian dollar at 73.7. And it's rounded that up to 74, which is basically where we've been for 3 or 4 straight weeks now, maybe 5 straight weeks, right?
Quite a few. It's been pretty constant.
And crude oil at 79.81. That is in, if you see my cursor there, currency in USD. I am on yahoofinance.ca, and you really do have to pay attention to whether it's Canadian or USD. And right there's a prime example, Bitcoin, which obviously never closes, but 4,748 is obviously in Canadian CAD, Canadian currency.
And I want to shout out my
And moving
boy
right along,
Outdoor Finance
go
on
ahead.
Twitter. I want to shout out my boy Outdoor Finance on Twitter. He started investing Bitcoin at exactly the right time. I'm not sure.
Actually, he's an upcoming guest on the Passive Income Podcast, so I look forward to talking to him. And there you go, the Nasdaq closing the week at 16,274.
I'm mad that you got him on a podcast before I did.
Oh well, there you go. The FTSE over there in London, over there in London, England, closing the week at 7,682. And that is currency in GBP, Great Britain pounds. The Nikkei, any Japanese viewers in the audience? And this currency is in JPY, which I guess would be Japanese yen, 39,910. And for fun, let's look at Canadian to euro at 68 cents. So those are the closing numbers for the week. And we're going to get into a lot more discussion of what actually, hey, what happened there? What happened there? There we go. Okay. Sorry about that.
All good. All good.
And yeah, we're definitely going to get into a lot more discussion of all of this week's earnings. So where do you want to go from here? I guess right to Monday.
Yeah.
Is that the idea?
Let's go and start Monday morning.
Okay, so I gotta share this screen instead, and we'll bring that up. And Monday before open, Domino's. I don't know. Is there anything on here that you paid attention to this week?
Quite a few actually. This was a bit.
Okay,
this
good.
was
Because I honestly none of these really. I didn't really pay much attention to any of these.
This was
So
this was a big week for me in terms of like what the stocks that I like to watch. Domino's, I'm a big fan of. Domino's is the king of pizza in my opinion. Of your major pizza chains, Domino's is by far my favorite. Papa John's a second, and don't bring Pizza Hut near my house. Slight earnings beat, 448.
did it again. Jeez, why is that doing that to you? I'm sorry, buddy. Okay, go ahead.
All good. 448 a share actual versus 437 a share expected. Slight beat, really called a hit when we're talking these kind of numbers. Domino stock about 4.5% on the week, but like what I really thought was impressive was a lot of Domino's revenue to the tune of 2.5 billion USD in Q4 2023 wasn't actually from pizza sales. It was from their like in-house supply chain to franchisees, selling equipment, materials, raw dough, food, and the sorts. Like it's kind of, are they the king of the pizza or are they the king of the supply chain?
Yeah, well, that's a very important point. Like the supply chain is obviously very needed, but it's also very like delicate. You disrupt the supply chain, as we saw with COVID. The supply chain got extremely disrupted through the entire pandemic, and it's not hard for the wheels to fall off when the supply chain is even just slightly given a bump, right? Like they wouldn't survive too many games in the NFL or NHL.
Absolutely not. I think that.
What else for Monday were you looking at?
I got three more for you. Next up is Workday, who actually also saw a beat, $1.57 a share actual versus $1.47, a share expected. Stock is still down 3 or 4% on the week. They announced they're buying a similar firm, Hired Score, if you've heard of them. I haven't, so they haven't disclosed the numbers on it yet, so you'll wait and see. But I was looking at the stock being down and kind of looking at their forward outlook, which was not the best. I mean, it wasn't bad, but it also wasn't great, hence the stock being down despite an earnings beat. I don't know. It kind of makes me look back. Workday as a HR borderline recruiting software, like what do they do that's proprietary? Like I've used Workday at more than one employer before, and I've also used several like UltiPro, Paycom, Paycor. What does Workday do that's really that different? That's my
different.
Somebody down in the comments, let me know. I don't get it. Also, though, on the subject of stocks I don't get, Zoom also reported. And I have been a Zoom bear for several years now. I quite like that is the one stock that I personally believe is a pandemic stock, but I keep getting proven wrong on that. Zoom also smashed earnings, $1.15 a share expected versus $1.42 a share actual. Stock's up 13% on the week. That's another. I don't get it. They're still way down since their COVID high in October of 2020, but like, I don't know. What does Zoom do that like Restream, Podcaster, even Microsoft Teams doesn't do? But hey, again, let me know down in the comments.
StreamYard, River, what's that other one called? Riverside?
Yeah, Riverside.fm. You are spot on.
Right. Yeah, there's multiple platforms that do more or less the same thing. Shout out to Restream, which as you know, we use here on the Passive Income Podcast and the Weekly Close Live. And yeah, but exactly to your point, though, it really did seem like a pandemic stock, the Zoom, right? Like everybody was using Zoom during the pandemic. And then after the pandemic was, I guess, more or less over, obviously COVID-19 is still a thing, but people went back to the office. There's more people in the office. So, but also to your point too, like, Hey, let's get some chat going. I'd love to have some comments in the chat.
Yeah, do you use it? Am I totally wrong? Because like Zoom, if I remember correctly, still pretty green over the last year. Green over the last 5, but like still down. I mean, they were pushing $500 a share in their October 2020 high. No, they came over. They were pushing $600 a share. I've got the chart pulled up in front of
Wow.
me on Yahoo Finance right now. Now, I mean, they're sitting closing today just under $71 a share. So,
Yeah.
um,
Okay. Yeah.
and then last one on Monday that I kind of wanted to hit, and this one's just kind of fun. Unity Software, not profitable tech startup, game engine for anyone at home unaware. Negative 66 cents a share actual versus negative 42 expected. Not profitable, which wasn't expected, of course. But I don't know how much you've seen the news, but it was what 6-ish months ago. They made a couple very unpopular decisions against that would severely hurt smaller and indie game devs in terms of
Mm,
licensing fees and ongoing royalties to Unity. And it kind of seems like their customers are up and leaving, to say the least.
right.
I mean, they may, don't get me wrong, I've played around with Unity just for fun. They make a good product, but the core business behind it sometimes.
Yeah. Yeah, that's unfortunate. Okay, are we I'm sorry. Are we ready to move on to
I
Tuesday?
am if you are.
I think I have Tuesday pulled up
You
there.
do.
So
Tuesday was also a fun one.
what catches your eye on Tuesday? I know the that Cava CAVA
Yep.
when I posted this on Tuesday, Savings Captain Tom definitely pointed that one out. And then down there at the very bottom, you see Scotiabank. As I alluded to off the top, there are a lot of Canadian banks with the earnings this week. And unfortunately, I think the Scotiabank was the only one on these graphics. So we'll just kind of have to go through those as well. But yeah, just jump into anything you want to talk about on two. Obviously, Lowe's too is another fan favorite in the Div Twit community. So
Yeah, I
feel free to jump in there and see where Tuesday takes us.
Yeah, I got a few. Like I said, this was a week that I was closely watching. Right up there at the top, you got Norwegian Cruise Lines. Came in negative 18 cents a share actual versus negative 14 cents a share expected. You got a slight miss on that. Stock's still up 17% on the week. Their outlook is good. I guess let's back up. We just talked about Zoom, COVID stocks. The vacation industry and probably the cruise industry was hit the hardest by COVID shutdowns and lockdowns. Um, Stock's only slightly up since where it was pre-lockdown. I guess you'd call that about February 2020, but up 30% in the last year. Management raised the outlook overall and says they see a pretty clear path toward profitability. And please excuse the pun here, but as we've reopened, the cruise industry has seen a huge boom, whether that be Norwegian, Carnival, Royal, whoever it may be. And the rising tide is raising all boats.
Great, I love it. Perfect.
Also, before market, everyone's favorite mall stock, Macy's, reported come in at $2.45 a share actual versus $1.96 a share expected. And I've said mean things to a lot of investors on this, and I'm gonna keep it going. If you hold Macy's stock, not financial advice, of course, what are you doing? What like they're closing 150 stores this year. That was announced. They're expanding Bloomingdale's and Blue Mercury. I've heard of one of those. But yeah, if you hold Macy's stock, like I don't know, I'm not a fan of brick and mortar retail. Stock's up about 3% on the day, down 6% on the week, and of course, down about 26% in the last 5 years. I just, if you hold Macy's, I would legitimately like to hear from you what future you see in the company and brick and mortar retail as a whole. Because I personally don't see it.
Yeah, actually, speaking of that, brick and mortar retail, just an announcement today. The Body Shop closing 33 stores in Canada. And so kind of right up that same alley. The one thing, obviously, from Tuesday that I want to talk about here is the Bank of Nova Scotia, uh, ticker symbol BNS. Earnings decline year over year, revenues up. And I think if you read through this article, it does kind of say, well, not surprising, it's a Canadian bank, so like we're still profitable, right? So
Canadian banks, solid dividends, lower than 1.0 beta. Like you and I, we did a podcast together back on Monday live over on the Marketplace channel, and yeah, dividend investors, Canadian banks, definitely a worth a look for your portfolio. Not volatile or not too volatile, at least in terms of beta measure. Looking at like Royal, who we'll talk about here in a few, over a 4% dividend yield.
Right. Yeah, no, exactly. The Canadian banks, very, as you alluded to, very strong. They're not going anywhere anytime soon. Uh, very good dividend yields as well.
And
So,
pushing 200 years.
Scotiabank, full disclosure, I do invest uh, in Scotiabank. I'm building that position as we go. So, yeah. Anything else from Tuesday that you want to discuss, or are we moving into Wednesday? I think
Uh,
we still wanted to touch
I
Cava, right?
say,
Was that how you pronounce
yeah,
that? Cava,
Kava. Yep, I
Cava?
got three more I want to talk about for Tuesday.
Oh, okay.
I
Oh, we're gonna be here for a
Oh yeah,
while.
like I said, this was a very good week for me. You mentioned
Yeah, okay, yeah. Everybody grab yourself a coffee, a tea, a beer, a water, whatever. We're
we'll be
gonna
here till
like
9
settle in for
o'clock.
the ride.
Lows $1.77 actual versus $1.68 expected. I'm going to zoom through this. If you heard Home Depot's call or you heard us talk about Home Depot's call, it was Home Depot part two, kind of what we expected. Beyond Meat
Right.
was a fun one. Negative 92 cents a share actual versus negative 88 cents a share expected. Stock is actually up more than 20% this week. The main thing that management said that drove the stock is they see a path toward profitability. They are redoing some of their price structure to keep up with competitors, and they also see operating expenses dropping $70 million in 2024, and that is a decent chunk of change
Whoa.
by itself. And then
That Beyond Meat one. So I'm talking about the product itself.
mhm.
That one confuses me, right? Because okay, you want beef and the ingredients are beef. You want a Beyond Burger and the ingredients the ingredient list is like just it feels like it's endless. It's like what is all this stuff in that they're using to make this taste like beef? And I don't know. That's more from the actual consumer perspective, and obviously less of looking at it like a stock and a profitable
Mhm.
company. I'm just looking at it like, what are they what are they putting in this to make it actually, right? Like,
I will give them this. I am not vegan nor vegetarian, but I have a lot of friends that are. Compared to
right,
their competitors, Beyond Meat just makes a better product, in my opinion.
right,
Like it's definitely not like you said. If you take a hamburger, it's definitely not beef, but it's not bad either.
right. And I think that's kind of the point is those products have come a long way, even just in the last probably 5
Oh,
years, let
without a
alone the last
doubt,
10 years, right?
without a doubt. And then last one that we want to hit, shout out Tom, the savings captain. Got to
Yes.
talk Kava, the newest addition to his portfolio. Which also I'm going to shout out Tom. Go check out the Money Happy Hour or his Money Happy Hour. I think it's the Shot series is what he calls it. Um, Absolutely great podcast. I think he's brought up Kava at least twice now. Dude makes a great podcast. Great guy. Highly recommend. But Kava, the stock.
Sorry, just to jump in there, could not agree more. Savings Captain Tom, Money Happy Hour podcast. I've been a guest on there. He's been a guest on mine. Uh, Great person. Definitely go give him a follow. Go listen to his podcast as well.
100%. But yeah, going into his most recent stock edition, $0, 0 cents a share is expected. They came up with 2 cents. So we're calling that a beat. The big news is profitability. Stock is up about 14% this week. Shout out Tom, eating good this week. I don't know. They opened a Kava near us pretty recently. Food's great. I love the food. I'm a big fan of the bowl trend, is what I've seen people call it. You have like your Kava, of course, the bowl, Chipotle, other things of the sort. Profit's been declining a little bit over the last 3 quarters as you kind of look at the sheer numbers. But if you look at locations open and other things of the sort, profit's going down. That's just because they're expanding their footprint. And as we saw here, they're still doing that while maintaining profitability, which is quite impressive.
So just because I'm not familiar with this company because obviously we don't have them here in Canada, but probably by the sounds of it yet, we seem to always be 5 or 10 years behind the U.S. What is it? Is it like a Chipotle or is it like
It's like a Mediterranean Chipotle.
oh, that sounds really good.
I love it. I love it. I like it a lot. I have spent more money than I'm proud of there since they opened it near me. It's really good, especially for what it is.
Right. Okay, are we moving on to Wednesday?
Yes, we are.
Okay, Wednesday.
I only got two for Wednesday, and they were
Jump into it.
both after. I should have hit TJX. That would have been a good one since I talked Macy's a little bit. But Wednesday, Salesforce, 226 a share expected, 229 actual. We're gonna call that a hit. Stocks up 7-8%. This week, not much really to say. The big news is that they are slowly integrating AI to their business. And shout out Salesforce. They seem to be doing it slowly but surely, which is kind of, in my opinion, at least the smart way to adopt new technology.
Right.
And the market really, really liked that. And then the other one, and I don't really want to talk about this one, but I feel like we have to because of Reddit. AMC reported earnings after market close on Wednesday. Negative 55 cents a share expected versus negative 54 cents a share actual. They're not profitable. Who's surprised? Stock was down about
Nobody.
two.
Who's surprised? Nobody.
AMC to the moon, boys. Stock was down about 2% this week. Still about up 10% on the last month. It's not bad. I mean, it's the meme stock. It is one of two meme stocks. I'm sure that everyone and like their mother would recognize. I did see like a really good article on them asking how much is like our companies like AMC losing money to like Netflix and streaming, which because I mean of course Netflix on the rise. Hulu, HBO Max, Disney. Who doesn't have a streaming service at this point? Is
Amazon
that?
Prime Video. That's my
Oh my
go-to
god,
one,
I
right?
forget about that one.
You have Amazon Prime. You just get the video with it, basically, right?
I don't have Prime, so
Oh,
uh,
okay.
I think I've talked about. I don't shop like at all. I think I'm at like one Amazon order this year, and I think I did maybe three last year. It's not worth it for me. But either way, yeah. So AMC quite potentially losing money to streaming services like Netflix. People, why would you go out to the theaters when you could just stream it at home?
Yeah, exactly. Just to kind of give my personal take on that, I do have Amazon Prime, but I justify it because I do watch the Prime Video more than anything else. Simply because I don't have like the Netflix or the Hulu or the Disney Plus or any of the others. So I'm like, okay, well I'll pay for one, and then if I ever do order anything from Amazon, because I'm kind of similar to you, I'll maybe buy like 5 things a year on Amazon, and I'm like, okay, well if I do, then I have the Prime, so I'll get it like next day or pretty quickly. So that's my justification.
See, I'm the family leech. We've got Netflix, Nebula, Hulu, HBO, Disney Plus.
Oh my god.
We don't pay for any of them.
Oh, okay, that's good.
No, like it's all like my uncle has Netflix, my wife's parents have Disney Plus, my parents have HBO Max. So we just piggyback off everybody.
Oh, so you're just all into the password sharing and all of that.
Yeah, that sums it up. Yeah,
Yeah.
yeah.
Okay, and unfortunately, the Canadian, other than Scotiabank on that one from Tuesday, are not listed on all of these other graphics. And I do believe, was it Royal Bank? I know Royal Bank, TD, and National Bank also reported this week. So let's just kind of mix these in here as we go. I think I think Royal reported on Wednesday. So while we're on Wednesday, let's just. I know you've got something to say
I
about Royal, so let's. We'll go. We'll get into it.
Royal's definitely the one I've done the most research on personally. I'm a Royal fan. Stocks up like 25, 26% over the last year for 4.2% dividend yield on a 0.85 beta. Sounds pretty nice to me. I wouldn't describe myself as a single stock or a dividend investor, but I heard that and I'm like, ooh, maybe. Full disclosure, I do not hold any of the stock, so I'm not, EPS $2.09 a share over 206 expected. Like Dave and I have talked about several times now on multiple different podcasts, they've been paying dividends for what we're going on 200 years now.
Royal Bank is the baby of the dividend
Oh, it
payers in the
is.
Canadian banks. They've only been paying for about 150 years.
only. Keyword there. Yeah, stocks trading under $100 USD. Yeah, 4.11% dividend yield. Only a 1246 PE ratio. Let's see here. They are down a little bit year to date. Maybe get that discount up. Yeah, 25% on the nose over the last 5 years. Basically flat over the last month, which is kind of interesting if you look at the chart. Royal Bank of Canada. Dividend. This is what I was saying. Dividend investors. I'm not saying you should invest. I'm just saying I personally will be doing some research into them.
Guess what the biggest company in Canada is?
I feel like it'd be a telecom, knowing Canada.
No, you've just been talking about the company for like the last minute.
Oh, it is Royal.
Oh yeah, by far.
I, man, that's I Royal's market cap what 136 billion. Ooh, Nvidia hit 2 trillion today. You got to catch up. That's not even our. That's just top three. That's not even our biggest.
Yeah. Anything else from Wednesday before we get into Thursday?
That was it for me on Wednesday.
Okay, just give me 2 seconds here, and I'll get the Thursday graphic up, and we'll kind of sprinkle in those last two Canadian banks, the TD and National Bank as well. Because honestly, I'm not sure what days they reported, but I know they did report this week, so we'll discuss those as well. Here is Thursday. What do you have on Thursday? Oh, Celsius.
Yeah, we got to hit Celsius. Twitter favorite Celsius.
Oh, Canadian National, or sorry, Canadian Natural is in there as well. Best Buy, After Hours was Dell. Six Flags, that's fun. Bath and Body Works down there near the bottom before open. A lot went on there on Thursday, eh?
Every week we do this. There's like a new stock that I didn't realize was publicly traded. I didn't know you could buy Six Flags stock. Today
I honestly, I just saw that for the first time right now too, and literally, I tweeted this earlier this week, and obviously did not read the thing.
But yeah, getting into it, we got to talk Celsius. Celsius is a big social media favorite right now. I think it's Cole. I think it's Grind is how you say his last name. He tweets about it a lot.
Grind.
Also, just cool guy. Got some good knowledge. Highly recommend giving him a follow.
Yep.
EPS 15 cents a share expected, came in at 17 cent actual. We'll call that I want to call it a slight beat, but truthfully, that's a 10% beat when we're talking numbers this small. Stock's up 30% this week, 60% in the last month. So a lot of people who bought it early February, late January, and they're already taking profits, which we've kind of seen as a theory. Stock was down a little today. Online Twitter theory seems to be people were taking profits, and if I made 60% in a month, I probably would too. Not saying you should, just saying that's what I would do in the situation. What really got this growth and got about 30% in the last week, revenue's up 98% year over year, and management raised their outlook. They're seeing massive revenue growth, high, maybe even upwards of 20% year over year for the next 3+ years. Celsius thinks they have found their target market and they are integrating, and it's only a time where they start taking, because I mean, we're talking a retail product, and what, as we've all heard from Mr. Beast, what does it take to sell retail product? Shelf space. And Celsius thinks they're in there. They think they're going to start taking shelf space away from the big players in Coke and Pepsi. And if they're right, then those growth numbers are going to seem small compared to what actually happens.
Yeah, oddly enough, Celsius is, again, going back to social media. I don't know. You've probably seen some of the pictures they posted of incredible looking displays in the grocery stores where they're just like taking up massive amounts of space. And like you said, the shelf space is sort of the number one thing in retail, especially in food and beverage, right? Like you have to be in the Walmarts and the Costco's and every other grocery store retailer to sell your product. So some of those pictures of like the displays have just been impressive to say the least. With that said, I've been buying Celsius here in Canada for 2 for $5, tax included, on the reserve. Whereas the first time I saw it was in Walmart for $3.47 a can. And I'm like, a lot less expensive to buy it on the reserve, no tax, 2 for $5. And that's kind of matching the same price as Rockstars, and I think probably even less than Monsters, right? So they're definitely getting into the to that like the Canadian market space.
And that's only good for them. Oh yeah, I just a little aside, like the good American that I am. I had trouble spelling Celsius when I was making my notes for this. I had to Google it, and I'm not. I realize how little I write that word.
Oh man, that's funny. That is very funny. Okay, so uh, we're still on Thursday. What
Yes,
else are we talking about on Thursday? What other notes do you have for Thursday?
I
We're
got
all
two more.
curious.
First up, we got Best Buy 272 actual versus 252 expected. Pretty nice earnings beat on them too. Surprisingly,
Yeah,
we're
that
going back
is
to that.
nice. That's like 20 cents.
Yeah, exactly. Yep. Down today, slightly up on the week. Kind of want to bring this one in just because of brick and mortar retail. Maybe when you have like your Macy's, who I called out earlier, maybe it's that's a lot more expendable. Whereas Best Buy, going back to when they pivoted during the 2008-2009 market crash into more appliances, and that's also Google it. That's why we don't have Circuit City anymore. Everyone at home, Google it. It's actually a really fun story.
Yeah.
And man, that has weathered them this far and continues to fuel growth. Going into those consumer staples, like I mean, you go to Macy's, I can live without another polo shirt, but I kind of can't live without a fridge or an oven or whatever. I gotta say, first earnings increase in 2 years. Like Best Buy, they've been profitable. We've seen their earnings kind of just steadily drop down, but for the first time in 2 years, it actually went up. So they're doing something right, and we're seeing it, and we're reflecting on it right now. Um, and despite even some lower sales, we're seeing higher profit margins. And again, yeah, let's fuel growth.
Just to add to your Circuit City story, there used to be a franchise chain here in Canada called Future Shop, and very similar. Like they sold computers and laptops and TVs and tablets and whatever else. Actually, this might have been so long ago, tablets might not even been a thing back then. But yeah, kind of very similar story. Best Buy came in, and I think what ended up happening is I think Best Buy Canada ended up buying Future Shop and just sort of rebranded all the Future Shop stores as Best Buys. But
You are
boom,
spot on. Best Buy Canada bought them in 2001.
right. Oh, was it that long ago? Oh my goodness.
The last one closed in 2015.
The last Future Shop closed in 2015. So, but yeah, pretty much more or less very similar to what you're talking about with Circuit City in the US, right?
Yeah, no, I mean, yeah, exactly. And then I guess keep moving. Last one I really want to hit on Thursday. I wasn't going to talk about this, but Dell 220 actual versus no, yeah, 220 actual versus $1.73 expected. That's a pretty big beat for kind of just that little computer company that we don't talk about much anymore. Stock's up
Right.
30% on the week. We saw a huge jump of like 25, 26% today. And that kind of goes back. We had a great forecast, a great outlook, and it all comes back to the fact that Dell, their AI servers and AI server space, their demand jumped more than 40% on just AI products in the fourth quarter alone. And hey, as AI and Chat GPT keep growing, so is Dell's profits.
Right.
Same thing, exact same thing, just about that's fueling Nvidia and super microcomputers ache. We're now seeing it in Dell too.
Sorry, is that everything from Thursday?
Yes,
Are we
yes,
on
it
Thursday?
is.
We're on Thursday, right?
We're on Thursday.
Losing track here, losing my mind. Um, like I said, I wanted to sprinkle in a couple more of the Canadian banks. I'm not even sure which days these were. TD Bank, also again, just kind of that similar story. TD Bank Group reports first quarter 2024 results. Oh, I think I have the entire transcript. No, what do I have pulled up here? And of
I'd say
course, my
T.
numbers are I'm on yahoofinance.ca, so these numbers are in Canadian dollars. Uh, diluted earnings per share, $1.55. Blah blah blah. Net income. Yep, yep. So
Good
obviously,
call.
yeah, you can go to this. You can go to the uh, yourself and sort of read all through that. But I just wanted to kind of bring up that obviously TD was obviously reporting this week as well. Basically, another Canadian bank saying yes, we made a whole bunch more money this quarter. They make profit like close to I think on average it's about a $1.2 billion profit per quarter for all of them. That's sort of the overall average. So you don't
And
get you don't really get surprises when the Canadian banks report earnings. It's like, oh, they made 1.1 billion. Oh, they made 1.4 billion for this quarter. Oh, they okay. Like so the average is when you see that average 1.2 billion per quarter, it's like, okay, yep, they just keep making money, right? So
another one with a 5% dividend yield and a below average beta. So I mean, we're gonna that is the beat of the drum for these Canadian banks. Be less volatile than the S&P 500 and pay out a nice dividend.
right. Yeah, yeah. And I want to say TD has been paying a dividend since around 1857-ish. So, again, in that
Years.
170-year range, just kind of consistently paying a dividend since you were riding your horse to the bank. It's almost become my favorite saying, right? Just back then when you had to literally ride your horse to the bank.
Hey, if it worked, it worked.
And we are into Friday, and I do have to kind of yeah. So unfortunately, I do not have the graphic for Friday because quite honestly, I have been borrowing all of these graphics from Dairyland Divs on Twitter/X, and I didn't see him post anything for the Friday. So we're gonna have to wing Friday, and then we'll sprinkle in that last Canadian bank as well, which is National, which I believe those were the 4 out of the big 6 that reported this week. So I jump into anything you have for Friday.
Yeah, the only one I really had was Plug Power. I am biased against Plug Power as a former shareholder. I think I sold back in like 2021, maybe 2020. I took my profits and left. They were a weird one.
Oh,
Hello,
there he goes again.
I say hello, Mr. Dave's dog. Um, not me this week. Uh, EPS negative 44 cents a share is what analysts expected, and it actually came in at negative $1.08 a share. That is a very very bad miss.
Right.
Um, which if you
Sorry,
don't
I
know,
lied. I did have the Friday in the entire week one from earlier this week. So yeah, there at the top you have Plug and a few others. But sorry to cut you off.
no worries at all. Yet stock was down about 3% today, still up 10% on the week, which is kind of like weird to say when we see an earnings miss that is that bad. Uh, According to their board of directors, C-suite, all of them, they say things are going to get better this year. Plug has not, I don't think, ever been profitable. They're a renewable green energy corporation for anyone at home who doesn't know. They have a really good outlook. They state that most of the loss in 2023 was into new projects and R&D. They put more into that than what people expected. So maybe we're getting near profitability of that, or at least they're unveiling new projects that they believe will be better revenue streams. And I guess investors believe it. Yeah, Plug Power been around for a while, and they've had a very up and mostly down cycle throughout their entire. They are, in my opinion, the Rivian of renewable energy.
Okay, nice. And my final note of the week is National Bank, which is considered probably number 6. In Canada, we call them the Big 5, but National Bank definitely has earned its spot as as number 6 in the Big 6. And National Bank shares close at record high as it reports 922 million Q1 profit. So again, not quite that 1.2 billion that the other Big 5 report on average every quarter, but number 6 coming in there strong at 922. That's a big profit, obviously, right? And if you
That
look
is
at National, like the charts and the history for the last just the last 5 years, and probably even go back to the last 10 years, it is probably the best performing bank of all the Canadian banks. So again, not financial advice, but definitely if you're looking at Canadian banks, you don't want to not look at National Bank.
wow. Yeah, I mean, yeah, actually, no, Dave, you're totally right. They're up like 90% in the last 80-90% in the last 5 years. Wow. And with a 4% dividend yield too. Wow. And like you said, that 922 million, that is sneezing distance from a billion.
Yeah, right.
Just a
But
casual
they've
78
got to
billion
get up to
away.
that 1.2 billion average of the rest of the Canadian banks.
Well, if we want to talk more reasonable numbers, I think the passive income posse needs to get up to 100,000 by the end of the year.
I would definitely agree. So definitely please hit that subscribe button. And that really takes us through the week. I'm not sure if there's anything else we want to mention in closing, but throw
I'm
it over to
done.
you.
I am done. I got all my words out. We are already 11 minutes over. Maybe I'll pick a few less next week. We'll see how it goes.
I wouldn't say we're 11 minutes over. I think we've been averaging close to 40 minutes. So I'm saying we're right on time. Every week we talk. You know, when we started this, we said we'll talk for 30 to 40 minutes. And every week we end up right at 40 minutes.
I'm kind of just scrolling through next week's earnings. Outside of like Costco, yeah, yeah. Y'all tune in for like the 15-minute episode next week.
Okay,
There
yeah.
is not a lot.
Awesome. Well, another great week, another great episode of the Weekly Close Live. I truly appreciate you, Joseph, for being the co-host here on the Weekly Close Live, a relatively new but not so new segment on the Passive Income Podcast. Please be sure if you're new here to hit that subscribe button, hit the like button. That's really what we need. We really need to see the likes and the subscribes. That just makes us feel better, and that's how we sleep at night. So
It's better than the warmest blanket.
it's so much better than the warmest blanket. Awesome. Thank you again, Joseph. And like I said, please hit like and subscribe, and we will see you again next week at 5:30 p.m. Eastern Standard Time. Yeah, it's still Eastern Standard Time before we go into Eastern Daylight Time next week. Eastern Standard Time, 5:30 p.m. here on the Passive Income Podcast every Friday at 5:30, the weekly close live. Like I said, please be sure to hit like and subscribe, and we truly appreciate everyone's support.
Yeah, thank you all for watching.